Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the economic calendar, 10-year treasury, inflation numbers, Dow Jones, Nasdaq, and S&P 500, and then specifically the SPY and QQQ, which are the ETFs for S&P 500 and Nasdaq, in terms of resistance and support levels, price actions, so on and so forth, and the Dow Jones as well. And in my opinion, leading up to Friday is the most important day for this trading week, which is May 31st, 2024, on that Friday, because the PCE numbers in terms of inflation number will be coming out, and the Fed highly regards those inflation numbers versus the other inflation numbers like the CPI and PPI, and that will be a determining factor moving forward into the next week as well, because if inflation is worse than expected, so increasing, then the markets will move in a negative way, because they were already anticipating from the last meeting from the Fed that interest rate will not be cut and will be postponed later on, or could be cut and so on and so forth, but that cut will be postponed. And if it comes in higher than expected, then that will solidify it even more in terms of the factual point that yes, it will be delayed further, and we don't know when it's going to come exactly. Now, if it is better than expected and comes in lower, inflation number comes in lower, then the market could get confident at to the point that inflation rate cut or interest rate cut will come sooner than rather than later. But we'll see. For the time being, we have to assess it day by day. But in terms of technical side, the Dow Jones and the S&P 500 are indicating downside. The Nasdaq is indicating a reversal to the upside, predominantly in my opinion because of the tech sector. Well, it is predominantly in the tech sector, but the fact that Nvidia is pretty much keeps rising quite a bit. So Nvidia is pretty much over a $2.5 trillion company, and constantly day by day it is going quite a bit, going up to the upside quite a bit. So that is carrying the tech sector for the most part. Again, Nasdaq is predominantly focused on tech. So given that, Nasdaq's potentially reversing to the upside, and then S&P 500 is going to the downside, but almost flatline potentially. And then Dow Jones is a strong indication to the downside. Now I'm going to go through all of them, again, technical analysis and all stuff. But before I do economic calendar, I'm going to cover it. Wednesday, May 29, 2024, at 1:45 p.m., we have New York Fed President John Williams speak. At 2 p.m., we have Fed Beggy book. And at 7 p.m., we have Atlanta Fed President Raphael Bostic speak. Now, again, for Friday, most important numbers, 8:30 a.m., they come out, just FYI. Now, in terms of inflation numbers, we're at 3.4%. And the reason why, in my opinion, I think the PCE numbers, they're not going to come better than expected, in my opinion. This is just my opinion. So given that, and then the inflation numbers at 3.4%, and the Fed wants to get to their target 2%, I do not expect the bounce up to the upside happening on Friday and leading up to next week as well, because given all this information, plus the data has to be very strong, the market will realize that the Fed will not cut interest rates. In my opinion, I don't think they're going to cut interest rates this year, but they're keeping it neutral when they speak for the most part. And then they hinted more strongly that this time that it will be delayed longer than expected. So it's more likely it's going to be next year. And when the market realizes that, so on and so forth, I think the market will start dipping down and we'll see a pullback, especially since we're at all-time highs for the S&P 500 and Nasdaq. So all-time highs, and then Dow Jones indicating a pull down regardless. I think we're going to start heading down by Thursday, end of trading day. Then the numbers come out, and then Friday going down, and then within the next week start going down. But again, this is all just my opinion, especially since, by the way, the inflation number is at 3.4, and the Fed wants to get to 2%. And to get to 2%, interest rate cuts is not the way to go. If anything, just delay it and then hope that the inflation number keeps coming down. Just based off calculations, I have different viewpoints in terms of inflation numbers and calculations and all that stuff, but I'm just saying specifically their viewpoint on inflation numbers and their calculations and their tactics to reduce it. It doesn't make sense for them to go against their grain off their theories while cutting interest rate, which is against what they basically explained, right? Now, in terms of Dow Jones, for the most part, we have an upward trend support level or resistance level, upward trend support level dating back since 2021. We have 1, 2 touch points. We have 3, 4 touch points. And within this, and when I zoom in later on, you'll see there is 2 touch points here and 2 touch points here. So it's multiple touch points on the resistance level and then upward trend support level, and then ultimately heading back down to the support level, which right now we're at 38,852 points. And then this is pretty much around the ballpark of 37,700, 37,600 points, give or take. It all just depends on when we hit it. So the longer we take, the higher the low will be, if that makes sense. And this is the MACD line indicating bearish or bullish movement. Right now we're in the bearish movement for the 5-year, the 1-year bearish movement, 6-month bearish, and then the 3-month, I believe, potentially crossing over. So again, even though we're heading down and indications on a downside, it's not going to just be a clean drop. It could be possible, but it's not going to be likely. Most likely it's going to be like down days, then reversal to upside or consolidate, and then end up heading down. Ultimately, I think we're going to head down to the upward trend support level personally, unless, again, inflation numbers are better than expected and inflation is lowering, basically. Then we could actually see a reversal to the upside, and what could probably happen is just say consolidate and then go to the upside and test the upward trend resistance line once again, and then maybe on other bad news or something start heading down, so on and so forth. But for the 1 month, I believe we're in the bullish. Yeah, bullish crossed over and then expecting to go up. So for the time being, we are meeting a bunch of moving averages along the way. So this is a good time to probably consolidate all the way until, for the most part, until Thursday, end of trading day, anticipation for the Friday numbers. And then by Friday, so it ends up consolidating until Thursday, end of trading day. And then by Friday, it'll determine whether we go up or down and then potentially reverse to the upside or not. But for the Dow Jones, it's strongly indicating downside regardless. The only thing is, though, for the Nasdaq, it's already potentially reversing to upside. If not, I'll show you. It pretty much looks like it reversed to the upside again because it's carried by the tech sector. But for the S&P 500, it's still indicating downside, but more of a flat line where it's potentially like based off a coin flip if it's going to go up or down. And I think it's just waiting for Friday anyway, regardless. Now, if we go over the QQQ in terms of Nasdaq, just for in case any new viewer, dating back since 2010, upward trend resistance line, upward trend support level, stayed within the channel except since 2020 to 2022 broke through, and then as of recent, this was April or March of 2024, went underneath it again, by the way, and then tested it and got knocked down, and heading back up to potentially test the upward trend resistance line and seeing if we could cross it. 5-year chart is, like I stated, the Nasdaq looks like it's reversing to the upside. So right now we are still in the bearish, but about to cross in the bullish. The 1-year chart is reversing to the upside versus last few trading days or something like that. It was potentially going to cross back down, arch down, but now it's arching back up. And then the 6-month is potentially crossing down, but I don't know. NVIDIA is carrying the market pretty well, like in terms of tech sectors. And then 3-month bearish movement, and then 1-month bearish movement. So technically tomorrow could be a down day. We're at $459.68. It could potentially be a down day, and then we could find support at the moving average based off of $458.79, $457.61, and $456.09. The $456, yeah, pretty much could hold us for the most part. And then if we end up just collapsing for the most part, we could just find support at the $451.90. But there's quite a bit of support regardless on the way. Like, for example, consolidated here the whole entire time around the 454, and you could see consolidated and then found support right about here. So I think 454 would hold us, especially here, resistance. So acted as resistance here, consolidated here, and acted as support right about here. So 454 would be quite a bit of support anyway. I just don't expect anything major to happen until Thursday, end of trading day. So we got about a day and a little over a half before that happens. We start going down dramatically, especially again because of NVIDIA and all stuff. For the Nasdaq, for the S&P 500, it's a little bit of a different story. But if you're basing off the upward trend resistance line, again, keep in mind the reason why I'm expecting pullback: Dow Jones indicating downside. The PCE numbers in terms of inflation numbers are coming out on Friday. I don't expect them to be anything crazy. I think the markets will probably take it as a negative because we won't see enough improvements of based off what we want to have the interest rate to be cut at the end of the day by the Fed to be cut sooner rather than later. So I think the reversal is coming because we're at the all-time highs for S&P 500, Dow Jones, and Nasdaq. So there's that. But now, if you do believe we're going to go to the upside, which is possible, obviously, if the PCE numbers comes in well for Friday, more specifically for the next few trading days anyway, regardless for the PCE number, the upward trend resistance level in terms of being potentially stopped at is going to be around roughly about $466, I'd say, give or take, and some change. It's showing 465 and some change, but these lines are not perfect. So I would say $466, and then at the same time, the longer we take, the higher the high will be, right? So if we take like later on, it'll be closer to 467. But there's that. We do have potential other support levels, but I just don't think that will be tested for now. But in case you do think they will, I'll just quickly cover them just in case. We have an upward trend resistance / support level that comes around here. I've shown it in the past videos, but essentially would come down and potentially bounce off the 451, I guess. Yeah, what I covered earlier coincides with the moving average as well. And then this horizontal support level, resistance level that could act as support at $447. But I don't think those will be tested tomorrow, more closely Thursday. So like always, I post these videos daily, so you could be notified tomorrow, if you follow me on X or YouTube, what levels will be presented for tomorrow, after tomorrow's trading day, for the next trading day in terms of support levels, if we end up trickling down. Except, again, Nasdaq, I don't think we will for Nasdaq. Now, in terms of the S&P 500, so SPY specifically, we have the upward trend resistance line dating back since 2010, just like for the new viewers, just in case. Upward trend resistance line, upward trend support, upward trend support. Did not break through for this one. Potential false breakouts. You could kind of see a little bit ticks right there. Now, we do have more to the upside for the S&P 500. So the PCE numbers come in good, better than expected. So lower inflation numbers. Then we do have a lot more room to grow. And then we'll have that breakout like we saw in 2020 to 2022 for the Nasdaq. So that 2020 to 2022 will happen again for Nasdaq basically. And then for the S&P 500, we'll just keep going up, meeting up the upward trend resistance line potentially. Now, in terms of the 5-year chart, it's potentially flatlined, like I stated. So it is in the bearish movement, but it looks like it's potentially arching down, potentially. And then the 1-year chart, it was trying to flatline, but now potentially again arching down. So it's like in the mid of everything. So S&P 500 is more neutral versus the Nasdaq. Nasdaq is showing reversal. 6 months showing downside. 3 month showing downside, bearish movement arching down. And the 1 month it's showing downside as well. It's there's a red tick right there. It's kind of hard to see, but it's a red tick. So Nasdaq and S&P 500 showed downside for tomorrow. The Dow Jones, I believe, the 1 month and 3 months showed downside for tomorrow. So tomorrow could be a downside actually, before we even meet Thursday, which is the Thursday end of trading day in terms of anticipation for the inflation numbers. But if you think we're gonna head up, I'll cover the higher levels first before I get into the lower levels. So the first price point we're gonna probably potentially meet having issues at is gonna give or take this upward trend support / resistance that we saw a couple times. So support here, support here, support. So it could act as a resistance. So you're looking at $533, give or take. We're at right now $529.81, which reminds me, the $530 and some change, we've had multiple times difficulty passing it. It's not just, for example, today, but multiple times. And then the 533 after that, which there was a packet between 532, 533, but regardless, we're going to be meeting the all-time high of $534. So $534 is going to be difficult, 533, which is within the packet of 532, 533, and then the 530. That would be on the high side. I do not think we're going to go higher than that personally. If we do, we'd be meeting this upward trend resistance line as well. That's going to be crossing, but I personally don't think that's going to happen tomorrow. But I'll cover it later on. If we do end up passing, I'll keep you guys posted on X and YouTube community and all stuff. Now, in terms of moving averages, they're pretty much all colliding at the 529, 530 anyway. So that's almost showing more of a factor of downside / consolidating limit. So like the limit would be passing 530, like a strong resistance level. Now, in terms of support level, we do have support at the 528, so pretty much close to the 529, and then the 527. And then after the 527, it basically goes back to those levels of the $525, $524, a little bit and some change. Then we trickle down to a packet of $518 to $522. I don't think we're going to go lower than 518, 522 if we trickle down, because ultimately we might end up just bouncing off of 524, 525 anyway, regardless in terms of support level. If we don't bounce off that, then we head down to the 518, 522. I think we would just be consolidating between the 518 and 522 regardless, as we've seen in the past trading weeks, so on and so forth. If we do end up heading lower, then there's the VWAP that I've explained before, which was the 515. And then the next VWAP in terms of 6 month, it was showing $503. So there's those levels. But again, I don't think necessarily we'll be trickling down until end of trading day, Thursday, for anticipation of the PCE numbers. But that's basically it for today's video. Thanks again for watching. I do appreciate it. Hope you guys have a great day, and I'll see you guys in the next video. Peace.